All right, let's dive in. Crypto, retirement. Two things you might not always put together, right?
Yeah, for sure. It's a pretty new concept.
We're talking about crypto for retirement today, folks. Pulling some wisdom from, you guessed it, YouTube.
Yeah.
Jenny Jones,
Oh,
specifically.
yeah. He's got some good stuff out there.
He does. His channels, retirement planning tools, and small business growth store. Those are the sources for today's deep dive. We've got the transcripts. We've done the reading.
We're ready to break it down.
We are. Now, full disclosure, this is about exploring ideas, not giving financial advice.
Right, exactly.
Crypto speculative, do your own research, all that good stuff.
Absolutely.
But Jenny Jones, he makes some really interesting points. And, you know, one that jumped out at me right away was the whole regulation thing.
Or the lack of it, rather.
Exactly.
Yeah.
He's got this sort of double-edged sword view of it.
I see what he means.
Yeah. On one hand, no regulation. That means innovation can run wild, right? Less red tape.
Things move fast.
Yeah. But on the flip side,
Well, it's risky, especially for, less experienced investors.
he uses this analogy. Someone mowing lawns for a living,
Yeah.
deciding to jump into crypto investing.
Oh, wow. Okay.
And it's like, hold on, are you really equipped for this? Without those regulatory guardrails in place?
Makes you think about the early internet days. It was like the Wild West back then, too.
Right. Total free-for-all.
And then slowly, government started catching up, putting rules in place.
That's a good point.
Mm.
So for our listeners out there, think about that in terms of your own comfort level.
Yeah, great point.
Are you comfortable navigating this kind of, like, unregulated frontier?
What's your risk tolerance? That's a big one.
Definitely a big one. Okay, now, another thing Jenny Jones really stresses is that crypto, it's not a tax haven.
Absolutely not.
Sometimes you hear that myth floating around, but he debunks it right away.
The IRS is very clear on that one. Crypto is taxed as property, plain and simple.
IRS, notice 2014-21, you heard it here first. So any gains, taxable.
Just like stocks, real estate, all that, capital gains taxes apply.
And he goes deeper, even talks about those long-term holders, folks who got in like way back, 2010, 2014.
Yeah, sitting on those massive gains.
But if they decide to cash out for retirement,
Could be a hefty tax bill waiting for them.
something to definitely keep in mind.
Yeah.
Okay, now let's get a little shadier. Pump and dump schemes. Jenny Jones, he dedicates a good chunk of time to these.
Rightfully so.
Yeah, he gives a clear definition, basically artificially inflating a crypto's price.
Spreading hype, misinformation, classic manipulation tactics.
You got it. Lure in those unsuspecting investors, drive that price up then.
Dump their holdings, crash the market, walk away with the profits.
Almost like a get-rich-quick scheme, but for the people orchestrating it, not the average investor.
Yeah. And sadly, it's not uncommon at all in the crypto space.
He even shares this story about, studying for a securities license.
Oh, really?
Yeah, and that's when it really hit him just how widespread these tactics are. Like, whoa, this is a real problem.
A real problem. So vigilance is key, Don't just jump into something blindly.
Do your research. If it sounds too good to be true, it probably is.
Words to live by. Especially in the crypto world. All right, welcome back to the deep dive. Let's keep going down this crypto rabbit hole, shall we?
Definitely. We left off talking about those shady pump and dump schemes.
Right. But let's shift gears a bit and tackle something Jenny Jones brings up that's super interesting, especially for retirement planning.
Yeah, I know you're going to say crypto and inflation.
Exactly. It's a real head scratcher, isn't it?
It is. I mean, we're all taught about, traditional hedges against inflation.
Gold, real estate.
Yeah.
The usual suspects.
Right. But crypto, it's a whole different ballgame.
It really is. And that's what makes it so fascinating for retirement planning, right?
Yeah.
Because the whole point of saving for retirement is to make sure you've got enough to keep up with the rising cost of living.
You're working hard, putting money aside, hoping it grows enough to cover, groceries, bills, travel, everything.
Exactly. So your money needs to keep pace with inflation.
Otherwise, you're losing purchasing power.
Exactly. And that's where crypto throws a wrench in the gears because it doesn't seem to correlate with inflation the way those traditional assets do.
So the big question is, can you really rely on crypto to maintain its value over the long term?
Yeah.
Like if you buy a Bitcoin today, will it buy you a loaf of bread 20 years from now?
That's the million-dollar question. And it forces us to rethink how we approach retirement planning in this new kind of digital age.
So let's dive into that.
Yeah.
What are the arguments, for and against crypto in a retirement portfolio, even if it doesn't directly correlate with inflation?
Okay, well, on the one hand, there's that potential for massive growth.
Yeah, the crypto market, even with all its volatility, it's shown it can deliver some crazy returns.
Some people believe that as crypto adoption increases, as the technology matures, the value of certain cryptocurrencies could skyrocket.
Potentially, yeah.
It's a high-risk, high-reward play. You could potentially supercharge your retirement savings, even if it's not a direct inflation hedge.
But then there's the other side of the coin, the volatility.
Right. That's the big caveat. The crypto market, it's known for its wild swings. Up one day, down the next.
It's like a roller coaster ride you can't get off of. And that makes it a bit of a gamble for retirement, especially as you get closer to retirement age.
Exactly. When you're younger, you've got time to recover from those dips. But when you're relying on that money to live on in retirement,
You don't want to be caught in a market crash 5 years before you retire.
absolutely not. Imagine that. All your savings tied up in crypto, and suddenly the market tanks.
It doesn't paint a pretty picture.
No, it doesn't. And this brings us back to a principle Jenny Jones talks about a lot: diversification.
Yeah, don't put all your eggs in one basket, right?
Especially a basket as wobbly as the crypto market.
He's all about treating crypto as a small, speculative part of a bigger, more balanced portfolio.
That's a much smarter approach. You might benefit from some of the upside, but you're not risking your entire retirement on it.
Makes sense. So let's say someone's listening to this and thinking, okay, maybe crypto does have a place in my retirement plan. What are some key things they should keep in mind?
Well, first and foremost, research. Don't just follow the hype or listen to some random person on Twitter.
Right, due diligence is crucial. Understand the technology, the risks, the specific cryptocurrencies you're looking at.
Don't invest in something you don't understand.
Exactly. And with that lack of regulation we talked about earlier, well, that means investors are more vulnerable to scams and manipulation.
Right, those pump and dump schemes, remember. The crypto world can be a bit of a Wild West, so you've got to be extra careful.
Absolutely. And another big one, taxes. Don't forget about taxes.
The IRS, they're watching. Crypto gains, just like any other capital gains, they're taxable.
So plan for that.
It's easy to get caught up in the potential profits, but that tax bill can be a real downer.
Especially if you're counting on that money for retirement. Okay, and let's circle back to those wealthy influencers for a minute.
Right, they can be very persuasive, especially in the crypto space where things move so fast.
They're flashing their crypto gains on social media, making it seem so easy.
But remember, they're not financial advisors. Their interests might not align with yours.
Don't get caught up in the hype or the fear of missing out. Make decisions based on your research, your risk tolerance, and your long-term goals.
Wise words. So it all boils down to this. Can crypto really be a part of a solid retirement plan?
It's the big question, isn't it?
It is. And the answer is it's complicated. There's no one-size-fits-all solution.
We've talked about the benefits, the risks, the lack of regulation, the tax implications, the influencer factor.
It's a lot to consider, but ultimately, the decision of whether or not to include crypto in your retirement portfolio, it's a personal one.
You have to weigh all those factors and decide what's right for you.
Exactly. It depends on your individual situation, your risk tolerance, your investment timeline, your overall goals.
But one thing's for sure, it's not a decision to be made lightly.
Absolutely. It requires careful thought, thorough research, and a healthy dose of skepticism.
And maybe most importantly, you've got to remember that crypto is just one piece of the retirement planning puzzle.
It's not a magic solution. It's not a guaranteed path to a comfortable retirement.
It's simply another asset class with its own unique set of risks and potential rewards. Approach it with a critical eye, do your homework, and make informed decisions.
Sound advice. So, as you continue to explore the world of crypto and its potential role in your retirement plan, remember to stay informed, stay vigilant, and stay true to your financial goals.
And in the final part of our deep dive, we'll bring all this together and offer some practical takeaways to help you navigate this ever-evolving landscape. Okay, welcome back to the deep dive, folks. We've gone deep on crypto and retirement, and now it's time to wrap things up.
Yeah, let's distill all this down into some actionable takeaways, help our listeners make sense of it all.
Perfect. Takeaway number 1, and this comes straight from Jenny Jones. Knowledge is power. Before you even consider putting your retirement savings into crypto, do your research.
Understand how it works, what drives the market, what risks you're taking on.
He's big on due diligence. Don't just blindly trust someone on social media because they've got a fancy title or a lot of followers.
Yeah, those wealthy influencers, they can be misleading. Do your own digging. Talk to a financial advisor if you need to.
Get informed. Takeaway number 2, and this is a big one, Be honest about your risk tolerance. Crypto, we've said it a few times now, it's volatile.
Big price swings, that's the nature of the beast.
If you're close to retirement, or just generally someone who doesn't like big risks, a huge chunk of your savings in crypto, probably not the best move.
But if you've got a longer time horizon and you're okay with a little more risk, a small allocation as part of a diversified portfolio,
Could make sense, yeah. But remember, diversification is key. Jenny Jones, he's all about spreading your risk.
don't put all your eggs in one basket, especially a basket as volatile as crypto.
Exactly. Takeaway number 3, taxes, taxes, taxes. Jenny Jones was adamant about this. Crypto gains, the IRS sees those just like any other capital gains,
So plan accordingly. Factor those taxes into your decision making.
especially if you're thinking of using those gains for retirement. Okay, takeaway number 4, retirement planning. It's a marathon, not a sprint.
Right. Think long term. Don't make rash decisions based on hype or, that fear of missing out.
Build a solid portfolio that aligns with your goals and your risk comfort level.
Oh.
And that might not even include crypto.
Exactly. Crypto isn't for everyone. There are plenty of other ways to build a secure retirement.
And finally, takeaway number 5, crypto. It's just one piece of the retirement puzzle. Not a magic bullet, not a guaranteed path to riches.
It's an asset class, just like any other. It has its risks and its potential rewards. Approach it carefully, do your research, make informed choices.
Couldn't have said it better myself. So, as we wrap up this deep dive, we want to leave you with one final question to ponder. If you were building your retirement portfolio today, knowing what you now know about crypto, how would you approach it?
Would you include it at all? If so, how much? What specific cryptocurrencies would you choose? These are all things to think about.
And remember, folks, this deep dive, it's been focused on retirement, but a lot of these principles apply to any kind of investing.
Do your research, understand the risks, and never invest more than you can afford to lose.
Wise words. Thank you all for joining us on this journey into the world of crypto. We hope you found it valuable. And as always, happy investing.